Well, hello and welcome back. We're on for another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson, and I'm the Australian Livestock and Commodities Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian feeder cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives, such as futures, options, and over-the-counter products or swaps, may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Well, today for this episode, we're fortunate to have back on the podcast Ryan Turner, who is the StoneX US Meats and Livestock Director based in Kansas City. Ryan, great to have you on, mate.
Great to be back. Thanks for having me.
Mate, as always. So I think where we start is a bit of an introduction. For those of you that haven't listened to the first episode of the podcast, I'd encourage you to go back and have a listen. We got Ryan on the podcast in January, but RT, for anyone that hasn't or doesn't know you, can you give us a bit of an introduction of yourself and your role with StoneX?
Yeah, sure. So for those that didn't listen in last time or don't know me, I have been with StoneX for 25 years now. I currently head up our commercial agricultural group here in Kansas City, which is right in the center of the U.S., working with livestock producers, processors, and ultimately end users. So got a pretty good view and a pretty good look at the whole value chain in the livestock and meats space here, and that's beef, pork, and poultry. So we're not species specific, but we definitely cover the livestock space,
Mate. And that's what we want to get into today. I think our Australian listeners obviously will be very interested in what you've got to share. Broadly, I'd be keen to get your thoughts on whether, supply and demand domestically. Cattle prices obviously in the US have been red hot, for the first 7 months of this year. And we'll touch a bit on tariffs and get your views on that and some of the impacts, particularly that Brazilian situation and what it means. But I think to get started, give us a bit of a rundown on your views generally on where the weather's at, seasonal conditions across the US and its key cattle producing regions.
Yeah, so we have seen a significant improvement in the drought conditions across most of the U.S. since we last talked. So when we talked in January, I think, we talked about the drought conditions being one of the biggest issues, facing specifically herd rebuilding and people wanting to, producers wanting to retain heifers, et cetera. We have seen a significant improvement in that over the course of the last 6 months, this spring especially. So, in April, May, and really that's continued all the way through even just the last few weeks where we've seen widespread rainfalls across, I'm going to say, 80% of what I would call cow-calf country. Now, there are some areas to the far west in the U.S., so think western Colorado, just call it anything west of the Rocky Mountains, is still mired in some drought scenarios. If you look at a drought monitor map from the National Weather Service, you can see it very clearly. You get west of the Rocky, there's still some lingering drought, but east of the Rockies, Kansas, Oklahoma, Texas, eastern Colorado, Nebraska, the Dakotas, they're fully recovered from, the prior 3 to 5 year drought that we'd been experiencing.
And by the sounds of that, that's a very good thing, because I remember in January you said it was probably the biggest challenge you'd had. So good to hear things are obviously on the up. From that, what's your views then on where the producer's mindset is at about a rebuild? Because I look at some of the placements of heifers or heifer calves on feed, and that's been declining for a couple of quarters now in a row. And I generally look at that as a good indicator of decision making at a producer level for a rebuild. And I know it's not the only indicator or signal you can look at, but What's your views on this rebuild situation for the US?
So it's a great question, and that's probably the biggest question that we get asked is when are we going to start to rebuild the herd? So a few things. One, the economic incentive is definitely there.
Mhm.
Cow-calf producers today projected to, make $400 to $500 per head. In some instances, that'll be higher or lower, but that's a pretty good average cow-calf return estimate. So I think the economic incentive is there to do it. We just talked about we've had a improvement in rangeland and pasture land and grassland conditions. So there's that working to benefit or to aid in getting started with rebuilding. The things that are maybe working against us from a herd rebuilding standpoint is just the outright price of these animals.
Mm.
So if you're a producer today and you've got a heifer calf, if you sell that animal today, you're talking about if you sell that animal as a 600-700 pound feeder animal and choose to do that rather than retain the animal, you're talking about a 3,000 to $4,000 animal per, so that's a lot of money, and that's a lot of cash that the producer, right now, quite frankly, just wants to take and put in their pocket today, rather than, hold that heifer and retain that and potentially not get paid back on that for, 1 to 2 years at least down the road. So I think that's maybe working against us a little bit. And we've still got, here in the US, we have a demographics issue, right? Our cow calf producer demographic is aging, and there just isn't a younger group coming in to replace them, or at least not at the same type of velocity and numbers that we need to really grow the herd. And so I think, we've got some issues there that we're trying to work through here in the US, but definitely the economic incentive is there, and they've got the feed to do it.
Yeah,
And I do think we'll see some of that this fall. I do think we will start to see some herd rebuilding this fall. You talked about heifers in the feedlot. I think last numbers we looked at, it's like 38% of total. Most people think that's got to get down to 34-ish, 34 to 35%, heifers of the total on feed. Um, Once you get there, then you can really say, okay, we're probably rebuilding.
and I think the point you make about the producer choosing to take the cash in front of them at the minute in a rising market in Australia, we can certainly attest to. The same thing happened in 2020. A lot of producers continued to sell into a red hot market after 3 years of drought and feed costs and the damage drought can do financially to a business. Producers chose to do the same, and I think that by the sounds of it mirrors the situation you're seeing over there at the minute. The producer wants to take that cash, and there's good money about in situations like the rebuild getting going. And I can certainly agree with you on that front. Australian producers have been in the same situation selling into that strong market.
Yep.
Ryan, we've spoken on weather, but I'd be interested to get your views on supply generally. I try and keep a somewhat close eye on slaughter numbers, and even like your non-fed kill numbers have been declining fairly strongly this year already. And to me, that I get the sense that's just a fact of running out of cattle. But then also importantly, you're starting to see fed cattle slaughter now soften fairly substantially as well. What's the supply picture look like? Is it getting extremely tight already, even though you haven't moved into a full-blown rebuild? What's it look like?
Yeah, totally. We are definitely seeing a tightening up on the cattle supply. And I got to be a little careful because right now it's almost like cattle and beef are two totally separate commodities. We are very, very tight on the cattle front. We're not as tight on the beef front, and we'll maybe can talk a little bit about that. But going back to cattle slaughter, you were talking about, I think year to date. I want to say fed steer and heifer slaughters down about 6% year over year or year to year, yeah, year to date. Cow slaughter is down a lot more. So cow slaughter is down 14, 15% year over year. here in the U.S. So, we're slaughtering less cows. Some of that's because we've processed a lot of them over the last 3 to 5 years during the drought. So we've already liquidated the cow herd. There's just not very many more left to liquidate. But yes, total supply of cattle is definitely tight and getting tighter. And like you said, if we do go into herd rebuild this fall, that only exacerbates the problem.
Yeah, it's an interesting, situation for you guys to be in, to see the numbers soften like they have. And, from what I'm hearing from you, you're not in a full-blown rebuild yet. And we know in Australia, when you guys were at the peak of your cycle, say 3 years ago, in 2022, you had quite big numbers of cattle supply. We were at our low point and we didn't think it could go any lower in 2021, and it did. It always seems to surprise the market how either much more supply you can get, like Australia's in the minute, or for you guys over the next, 12 months to 2 years, how much lower it can actually go in terms of numbers. On
Yeah, I
the
mean, if you look at total slaughter, I mean, 3-year average for this week is probably closer to 640,000 head, and we're going to be lucky to harvest 540,000 head this year.
Yeah, wow. And on those weekly numbers, in your daily wire that goes out from you guys, which I read the other day, there was a figure that a weekly slaughter volume was moving towards, or was its lowest corresponding week for that week within a year since, or in about 10 years, which mirrors, the previous time you were in a rebuild. So it looks like those weekly volumes, are pushing well down towards sort of 500,000 a week, which obviously shows how significant it is if they're nearly at 10-year lows.
Yeah, that's right.
Talking supply, Australia's been interested in it, not that we probably understand it as much, but recognize the contribution the import of Mexican cattle make. In your view, how significant is that decline in contributing to the overall softening, obviously particularly in fed cattle supply, because of this screwworm situation and the border being closed? Can you give us a bit more detail on that?
Yeah, so no, so like normally, if it's normal cattle supplies, or what I would call more normal cattle supplies, you're talking about Mexican imports of feeder cattle into the U.S. On average 25 to 30,000 head per week. If this was normal cattle numbers, that wouldn't be that big of a deal, right? We'd be able to just kind of work our way right through it. But when things were really tight like they are right now, 25, 30, 35,000 head a week starts to be meaningful. I mean, it's 4, 5, some, could be 6% of total weekly slaughter that we're just missing. And if you look back, we first closed the border to Mexican imports back in November of last year. Well, that would be, coinciding with animals that would have started to get harvested, you know, kind of 2, 3 months ago, all the way through to now. And we're missing that supply. And it's, again, when you're this tight, any number of head that you don't have available is meaningful.
So on that, and we're talking feeders at the minute as well, and I suppose that situation with Mexico, or the lack of Mexican feeder imports, is only going to be exasperated the longer the border stays closed, which looks like the foreseeable future. The other one, which I wouldn't mind you giving the Aussies a bit of context on, is the supply of dairy feeders, or beef on dairy feeders into the feedlot. It's obviously a major part of the US market, probably a lot bigger than our Australian situation understands. I think it's going to get big in the next sort of 5 to 10 years here in Australia. But the contribution of those beef on dairy feeder cattle into the feedlot, is that plugging a bit of the gap left by the Mexican situation? Do you see it, as sort of propping up that supply? Is it a big contribution here?
So Ripley, I'll be honest, we hear a lot about it. The industry likes to talk about it, and it is adding some, but it's still relatively small on an overall basis. Ben Parks, my colleague here in Kansas City, he's our head livestock analyst on the cattle side. he put some math together and did some work behind it. It actually comes out right now by our best estimates to be about 1% of total. So we're that beef on dairy ad is about 1% to total beef production. So it's adding some, but it's not nearly as big as what you might think based on as much publicity as it gets in talk about in the industry.
Yeah, so it's obviously negligent, but you mentioned production, and I think that's the next part of the supply chain that is worth referencing. You started with, you know, cattle supply itself, physical supply is getting tight, but you're generally okay for actual beef supply or availability of beef. I recognize that you guys are pumping out some serious production numbers because you're feeding cattle for longer, or the feeders are. Give us a bit of context on where the actual beef supply at the minute sits relative, to previous years, and how that's tracking.
Yeah, sure. So, a couple things on the beef supply side that are lessening the blow to the overall outright price of beef. Two things. One, and you referenced it, is the amount of carcass weights, right? Our carcass weights here in the U.S. continue to grow. Right now, today, they're around 940 pounds per carcass. That's 10 to 15 pounds higher than a year ago at this time. That's 30 to 40 pounds per carcass heavier than the 3-year average. So right now, year to date, we're adding about 4% to total beef production via larger carcass weights or heavier carcass weights. And, for some math behind why are we adding so many pounds? It's cheap feed. We talked about the improvement in the growing conditions. Well, that has also been in the Corn Belt, and cost of gains right now today at most commercial cattle feeders across Kansas, Texas, Oklahoma, Nebraska, just call it 95 cents to $1 per pound would be our cost of gains today at the commercial cattle feeding level. Well, cash cattle traded last week in Kansas at 235 a pound. So it's costing us $1 a pound to put a pound on, and we're receiving $2.35 a pound for that extra weight that we're going to put on as many pounds as we can. And that is not going to change anytime soon. We have a monster corn crop coming at us, and corn crop is going to be really, really big this fall. And so that gives us another probably 12 months of relatively cheap feed environment where we can continue to pack pounds on these animals.
I think, when I hear that talking about the corn crop, cost of gain, those sorts of things, I think that's probably a real positive is the size of the corn crop coming at you, and the cost of gain is going to stay, relatively low compared to what the actual the out price is. I think that's a really good thing. But for Australian listeners' context, Ryan mentioned, the average fed carcass weight sort of 940 pounds. In Australian terms, that's 425, 430 kilos. Our average carcass weights for Q1 of this year was 310. So the US is 120 kilos on average heavier than Australia, which gives you an idea of the volume of beef, that can be produced. And I think when you reference that carcass weight, Ryan, it obviously says to me that yes, your supply naturally of physical cattle is going to decline, but like we saw during our rebuild, the production numbers will probably surprise people because of the strength of carcass weights propping up overall production.
Yeah, I think so. And so that's what when I said earlier, I kind of jokingly said there's, like it's almost like beef and cattle are two different commodities. And, unfortunately, the U.S. packer is kind of caught in the middle of that, where their margins today are really, really poor. And, that's another factor on the supply side that we've got to think about is, they've started to curtail, their harvest rates and their slaughter rates. And we'll probably continue to see some stress in that industry, unfortunately, where, they're having to pay up for cattle and aren't able to prop the beef up, at least not at a pace to offset the higher price of the cattle they're paying. The other thing on the supply side, and I'm sure you wanted to get into it, so I may be jumping the question. But the other thing on the supply side that has, definitely been impactful for really the last 12 to 18 months has just been the sheer amount of imports that the U.S. has been bringing in. Obviously, a huge portion of that coming from y'all in Australia, and recently that had also seen a significant uptick in imports from Brazil. So between Brazil and Australia, the U.S. had become a significant importer of beef, and that's also helping put more supply on the market, and honestly keep, while we're at record high prices on beef, it is keeping beef prices in check to some degree, because if we did not have these imports coming in, we'd be even higher priced.
Yeah, and I think that I did want to get into the contribution the import situation is making, and I think it's probably a good place to get to. But before we do, the market itself, I saw overnight, was at an auction house. I think it was 5 weight steers made 500 cents a pound, and 7 weights were at 400. Give us some idea on how hot this US market has been, because we thought it was strong, and you yourself said it looked strong 7 months ago in January, and it's just continued on its march. Give us the rundown.
Yeah, hot is the probably the best term to describe it, Ripley. It is hot. It is on fire. We've seen, record highs in not just US, live cattle futures, but also in the cash markets. We've seen record highs in feeder cattle futures. We've got, near record long spec fund positions in live cattle. We've got absolute record long spec fund positions in feeder cattle. The auction barns, as you mentioned, it's almost a daily occurrence where it flashes across the news ticker or social media that some set of class of cattle somewhere in the U.S. has set a new high, and I don't know when it comes to a stop. Ultimately, it will. It feels to me like the market is almost into a demand rationing phase where we are trying to take the market as high as we can, fast as we can. That just forces people to stop buying.
Hmm.
And, like we do with corn, where we have a short supply situation, I relate it to the grain trade. I kind of grew up in the grain trade. If, we had a short supply situation on corn, well, we just had to take the price high enough, fast enough to make people stop using it. And that's what it feels like we're trying to do right now with cattle, is just how high can we go? And at some point, you know, the buyers of either cattle, feeder cattle, fat cattle, beef, the buyers will stop. They'll do something else.
So just on that then, we're talking about physical cattle supply getting quite short, but beef supply, obviously with the contribution of imports and domestically, carcass weights means beef production's quite strong. In your view, it's probably a combination of both, but are we looking at a US market that's supply driven or demand driven?
I think it's a little bit of both, but I would tell you, and I said this back in March. I gave a speech at our Ag and Dairy Outlook in Nashville, and I said we've got as much of a demand problem as we have supply, and I don't think demand's a problem, but it's the strong demand has definitely been a catalyst. I never would have put beef into the inelastic category on a supply demand chain, right? Um, but I think you have to. We
Mm.
were talking about it in here the other day. The demand and the supply demand curve has just, over the course of the last, really post COVID, the last 4 years, just continues to shift further out and up to the right. And so you've got this inelasticity of beef demand. It doesn't matter what the price is, demand stays the same or goes up. We talked about it in January. I think I threw some statistics out, but like right now today, total beef availability. So this is total production, imports, net of exports, just total per capita availability is going to be actually a little higher this year in 2025 versus 2024. record large actually from a supply perspective, and price is still going to be higher. So that's a demand issue. And now we do see supply on the beef side. The USDA, actually, we had a report yesterday from the USDA, their monthly supply and demand report, and they did start to cut into beef production second half of this year. They took a pretty good hatchet to 2026 numbers, revising those production estimates and availability estimates lower. And so we do start to see the supply crunch really start to hit, but it's also been very, very heavily demand driven.
And we, you say it's a problem, but it's a situation that, demand is becoming so important. And I think your point about beef becoming inelastic to supply and demand gives good context to it, to Australia, that obviously to you guys as a consumer in the US, it's critical to have in the shopping basket by the sounds of it. Or even in
Oh
food
yeah.
service, it's just not something you go without anymore, regardless of what the price is. You just pay up. And I think, we as Australians in a situation where we're producing, in our terms anyway, a lot of beef, we love the fact that you guys over there are demanding a lot of it, because it's the US is such a key market to us. 25 to 30% of our total, exports are hitting that market, and clearly, the demand is there and maintaining that pace despite the fact that we're moving a bit, and you've got good volumes locally.
Yeah, and that's not going to change anytime soon. Because even if we start a herd rebuild, it's years into the cycle before that is additional supply available to the market.
Yeah, and I think, you make a good point. It's a lot like here in Australia. You can't turn on beef production, or I should say probably cattle supply, overnight. It's from conception to the time that animal exits a feedlot, you're looking at sort of 2 to 3 years at a minimum, depending on the length of the feeding program. Like, it's, you know, your point is something that we've dealt with here in Australia. Is it is an elongated process simply because of the nature of the cattle cycle. Talking, demand, you mentioned Brazil, and I'd like to go back to that.
Okay.
Obviously, this situation with the initial 10% tariff for Brazil has been raised in the past fortnight to an additional 40%, which puts the rate at 50%. But on top of that, there's the outer quota tariff for the safeguard for other countries into the US at 26.4, which gives you an outcome of 76.4% the Brazilian beef is going to get tariffed on. That must obviously be of concern in terms of, the suitability for any Brazilian product to now be moved from Brazil into that market because of how cost prohibitive it could become. What's the talk in the market locally about that situation? Because we as Australians, and certainly the meat end of the market, have watched it quite closely.
Yeah. So it's definitely going to be an issue. So the first 6 months of this year, average U.S. imports of Brazilian beef was around 100 and it was a little over 100 million pounds per month on average. And I think with the current tariff rate, where until we get a deal done or until Trump gets a deal done with Brazil, our imports from Brazil are going to go to zero. It's just so cost prohibitive at the moment. I don't think we're going to import much at all until um, those issues get resolved, which is obviously a good thing for you and your Australian producers. And it'll create some strain here, especially in the lean trimmings markets, right? And that's where our biggest demand pull is right now. We're coming a little bit out of the seasonal, the huge seasonal demand for that. But you've seen it in the price of 90s here and even 50s here. The price of quote unquote hamburger is very, very high, and if we lose, which it looks like we're going to, at least for a little bit here, lose this supply chain from Brazil, that's only going to put additional stress on that lean trim market, stress to the upside.
Yeah, and it's such, Australia was well behind when I last looked at the numbers. I think they were year to May, so it's a little bit out of date. But, there was Brazil, and then there was daylight in terms of second import, like Australia was second at import volume. So it shows, the
Yep.
substantial nature of that when volumes start to decline. Have you got any idea, from your conversations around Brazilian products sitting in cold storage that will obviously now start to get trickled out to the market? That's been shipped prior to the 1st of August.
Yeah, I think there's some of that that definitely went on, and actually talking with our counterparts, our StoneX counterparts in Brazil that work with some of the processors there, it sounds like they were definitely um, front running what they felt like could be a potential slowdown with if Brazil and U.S. trade negotiations went haywire, which they kind of have, it sounds like. So I do think there's some of that. Now I can't put a number on how many pounds, but definitely you saw some of that. So the big like in was January was a huge month. That was obviously because of we hadn't hit quota yet, but we were just huge demand pull that month. 2 months ago, we had another big month of imports, like 150 million pounds plus. I think some of that was definitely going into storage. Kind of like I said, front running these potential tariff increases.
Yeah, it'll be an interesting situation to watch, and I think for Australia, it does place us in a relatively strong position to supply that market. We're not gonna. I don't think we as Australians should pretend we're going to fill the gap left by Brazil, or at least even part of it, because our production volumes and exports in total simply won't match the scale of that Brazilian system. But it does place us in a strong position. But what about the Chinese situation? Off air, you were talking about how it has somewhat affected pork exports, and that indirectly has a bit of an impact on US beef. Can you give us a bit of a rundown on what that means for the local market, and just a bit of a broader picture on that situation with China you're in at the minute?
Yeah, so obviously the U.S.-China trade tensions continue to kind of escalate. We did just earlier this week, I think Monday, get a extension, another 90-day extension that holds tariffs where they're at with China as the two countries, continue to meet and try to work out a plan or work out a deal, as President Trump calls it, try to work out the trade deal. But in the meantime, I do think it has slowed down pork exports out of the U.S. to China to some degree. Some of that's just overall demand, from China's dropping off some, but it's also been related to the trade tensions and uncertainty more so than anything. Just okay, we don't know what's happening, so we're just going to slow down on all of this, and that has pushed a little bit of pork back onto the U.S. market, which has kept pork relatively cheap. It's still high priced, but it's relatively cheap compared to beef. And so I think, as we see, as I mentioned earlier, as we take the price of beef higher, and we're on a tear again, we're back up to, $3.90 choice cutout. That was the print yesterday. I haven't seen it today. We might be approaching back up towards $4. But you're starting to get back up towards these record highs again. And if we go on and make new highs, all of a sudden, beef becomes, like I said earlier, so expensive that we do see some demand rationing and some switching. And we've seen a little bit of that, but not enough to slow down the price of beef.
Yeah,
But I think from your perspective and your listeners, we're going to be a home for Australian product for quite some time to come.
and we need that because we're going into a situation where we're going to be producing a lot, for the next, certainly this year, and probably record production again next year. It's good to hear that the demand generally is there, and Australia's competitive nature, in the sense that our dollar's weak relative to the greenback, and the fact that our cattle prices are obviously substantially lower. The outcome is we've got a quality product that's at cheaper levels than the domestic stuff to fill that gap left by your local situation, and obviously potentially some of this tariff exposure that's affected a major supplier of yours being Brazil. So it'll be an interesting space to watch, and I think the outcome for Australia this year will be record beef exports to the US. Last record was set in 14 at 415,000 metric tons, and I think we'll surpass that this year. So it's I think it's pleasing to hear that you guys are there and we've got the product and looking forwards to giving it to you. All right,
Sounds good,
mate.
Anything else?
No, nothing from me. Unless there's anything you that we haven't spoken about that you think is worth mentioning.
No, I mean, we definitely hit the highlights, Rip. This is a great conversation. And like I said earlier, I definitely appreciate you having me on.
Mate, thank you as always. Really do appreciate listening to you, and I'm sure everyone else will. Yeah, mate, take care. Thanks for having us, or thanks for being on the podcast, and we'll see you next time.
Okay, thanks a lot, Rip.
Cheers, Ryan. All right, so next episode, we'll look at the recently released Q2 slaughter and production data from the ABS, which will come out on Tuesday, the 19th of August. Expecting that data set to come out next week to see slaughter volumes at 10-year highs for the quarter and beef production volumes to break new records. So really interesting episode today. If it's raised anything that you'd like to hear from Ryan about in a bit more detail, let me know. Send me an email to ripley.atkinson@stonex.com or record a voice memo of yourself, where you're from, and the question, and I'll get Ryan on to answering it. Feel free to share this episode or any others with your mates or friends that are interested in hearing about the market. But otherwise, thank you for listening. Until next time, take care. Cheers.